Good morning, guys. Welcome to this Monday, September 29th. We got a Monday morning rally, is what it feels like and it looks like. So we had a couple of days of pretty crazy stuff going on. We were all the way down here in the 6620s. A lot of volatility going on last week, and then Friday was a little bit more of a holding day. It close to the upside. It was a strong close on Friday, and then we ended up with an overnight taking us into long territory, like positive territory in terms of direction. So we are right up here again in the overnight, and that is it kind of took me by surprise a little bit. I was thinking more range-bound trading, but it may still turn into that. We'll see how this overnight hold fares when we get into more of the day session trading. Overall news this week and this morning. This morning we got pending home sales and Dallas Fed manufacturing. So pending home sales at 10, Dallas Fed at 10:30, nothing at 8:30 today. So 10 and 10:30 we get news today. We had a ton of Fed speakers. Amazing, it's freaking a second 5 speakers coming out today. I don't know what these guys keep either doing their speaking about, but it seems overdone. So Fed speakers, 5 of them today, but the only news we have is at 10 and 10:30. Now looking at Tuesday, we get housing data, we get consumer confidence and job openings. For Wednesday, and now that's October 1st. So the first Monday, Tuesday here is the last 2 trading days of September, and then we roll into the the fourth quarter, end of the third quarter, start of the fourth quarter. So wrapping up that third quarter, we can probably expect some volatility these 2 days for based on probably a month-end settlement, rebalancing stuff going on. And it's not just month end, it's quarter end as well. So if you have quarterly performance standards, then they're probably going to be doing something to improve that. Hence, maybe a rally into the close. That may be what happens, right? So Wednesday, we end up October 1st, via ADP, PMI for manufacturing, ASM manufacturing, construction spending. Thursday, jobless claims factory orders, not much on Thursday, but of course Friday, then we get the employment situation. So it's the first Friday of the month. So employment situation on Friday, PMI composite, ISM services. So fair amount of stuff going on this week, especially this employment situation coming out at 8:30. So that's the week rolling into the fourth quarter, and the end of the quarter rebalancing to be expected. Market right now is to the upside. So I would start off this thing with the bias to the upside. We are still range bound. We are in that stage 3 right now. I would not be surprised if we see some strength in the last 2 days if the hypothesis that um, end of the quarter performance is going to be driving this higher into the close. I would not be surprised if that happens. That could result in a little bit of selling beginning on the next quarter. So Wednesday, Thursday, we may get some selling based on that, but we'll see how it shakes out. Um, end of the month, end of the quarter stuff is always tricky, but end of the quarter usually end up with a little bit of a strength, and when people have to fix either take profits very late or that would be driving the market to the downside. But um, if they rally it into the close of the quarter, that could also be a way of just showing performance. So starting off at this point from the long side, looking to buy weakness at this point against the 67.20s, 67.05s down to the 66.95s for rotations back up again. And I would say below that 60, right there at the 69.95, that's that first ledge, that first high volume area. If they trade below that one, will take off the long bias and go back a range bound. Now we are up here against resistance, the nice 3-letter ledge we are testing right now here at the 67.30. So if that holds, we're probably going to be staying in the range here. I mean, we have the lower end of this range. We have high volume areas here at the 66.95, 66.70s. The lower end of that range is at 66.30 to 40s. It took it all the way down to 30 to 40s. The upper edge is at 67.30. So we're right here at the upper edge right now. So we could look for short setups for rotations back down again. That's what I would be doing. Not looking for a breakout rally by any means, though I'll take it if it happens. But the way we look at this right now, we are range bound. We are up here against this upper edge. So looking for short setups against 67.30, the 67.45s, the 67.55s for rotations back down again. So that's kind of the way we get the day started. So right now, to get started, looking for early strength. If we can get the retest of these highs potentially higher, I'm looking for failure trades against the 67.30 to 35s, the 45s, the 55s for rotations back and down again. If they take out that London low 67.20, 15 to 67.20, we could potentially expect a little bit more weakness heading back down again. But I would still look to buy against 67.05s and the 66.95s. At up to the London close, I believe. After the London close, if we see weakness going into the afternoon, I would probably be a lot less aggressive on those. But right now, to get started, looking to buy weakness, looking for early strengths. You can retest these highs, and then looking for short opportunities against them. So 67.35, 45, 55, looking for short setups for rotations down. And if we get that early weakness, looking to buy against the 67 20s. 67.05s, 66.95s for rotations back up. So if they're back below 66.95s, they're still looking to buy weakness, but not as aggressively at that point. All right, so that's how we get started on the ES this morning. And we've got some couple of days of cross currents ahead of us, so let's be aware of that. Finally, not finally, the bonds and Nasdaq. So bond market, pretty much sticking in a range. They're off the lows, but they're not rallying by any means. So I would just start off range bound on the bond market, see how that goes. Watching that lower edge. If they start taking out that 116.05s again, they've been probing down here. This could certainly turn into a move right back down here to that 114s, but it is not a straight line by any means. And right now we got some early strength. I would not be super aggressive on that one right now. We are above that 1620. I would wait for that 1624, maybe 117 to come out before I get comfortable about this one backing off that lower edge. But it is pretty much, it's off the edge, but it's also right up here in this little area they've been building value for a while. So they've been going back and forth in this lower range for quite a bit. So I would be looking for them to take out that 116.30. And if they can do that, yeah, I'll be back in that upper range again, looking for rotations up to the 170, 180. But right now, range bound trading, looking to get short against the 1624, 1630s for rotations down. Looking to buy against 1618 would be aggressive, but 1614 to 15 04s, 115.30 for rotations back up. Below that 116.04s, I would be starting to think short side, which start shifting my bias towards the short side. So they're going to buy against that 115.30, but not as aggressively at that point. So that is the bond market. Let's see if that little strength is going to hold up or not. Nasdaq also looks like I have a pretty good overnight. They are right back up again. So they are up here against the that upper area of resistance, same as the ES. Now Nasdaq did pretty good move to the downside, so they're reversing it quite a bit. They were down at 24.5, now they're up again to 24.9, so 400 points in another direction. So starting off, same story there, looking for continuation of this early strength. I'm going to buy against that 850s, the 820s, 780s for rotations back up. I would give it down to the 750s before I start shifting my bias. But if they trade below that 750s, I will take it off the long bias and going back range bound. And on the way up, looking for shorts against 24.9s, 24.970, and 25,020s for rotations back down again. So we are in stage 3. We're going back and forth in this range. And even if it looks like it's a pretty good range, a rally going on here in the overnight, we are still running right up to those upper edges. So we're looking for short setups there, rotations back down now. This is because we are in stage 3 in the profile. We are building value. And most of the time when we are building value, we get that rotation back and forth. We run to the outer edges, then back to the mean, and then that's how it keeps going. The only caveat for today is really that we have the last 2 days of the month. So if they're going to try to run this higher to improve performance going into the month or the quarter end, that would be the only reason I think we can see a good breakout happening on the upside. We'll take it either way, but initially I'm looking for short setups against resistance for rotations down again. Just keep it in the back of your head. If that breakout looks like it's happening, probably stay on the long side. But I would be looking for that breakout to happen on the upper edge and then some. So gonna have to be a little bit convincing before I start hopping on the long side at the highs there. But it can certainly happen. You never know. When you have a performance target to be met, you can certainly drive it quite a bit higher than would be feasible, but that would just result in probably a correction happening beginning in October pretty quick there. So as you know. When it comes to gold, gold is keeps surprising, you know. Someone is buying gold, and the reason they're buying gold is we've talked about it before, but look at this thing. Right up here against the 38.60 now. They another move out of the middle to the upside. So they run it higher, they consolidate 3, 4, 5 days, and then they take off again. And it's been like that now. It's almost $2,000 higher than when this whole thing started. We started around 2,000, not too far back, and then we've been rocketing up higher here. So someone is buying gold. Someone is definitely on the edge there, picking it up. Mostly big bags, most likely, but it's net buying of gold is what's happening. We talked about a few opportunities, a few different things going on there, but it's when things get clearer, we'll know what's driving it. But at this point, gold is higher, traded from the long side of the market. So look to buy weakness, 38.42 or 38.40 to what is it? Oh, 48. This is 55. That edge kind of they took that out already, so that's done. Have a new high there, but so looking to buy against that 38.48 against 35s, against 27.28s down to that 20s. If they trade below that 38.20s, I would take off the long bias and going back range bound. But at this point, trade it from the long side of the market. I would consider a potential short trade below 38.35 if they retrace that the London session. If that happens, we can, and sometimes we get a pretty good retracement back into this lower range again. But we do have that 38.20. That's going to be the edge has to hold if that's going to be reversed. So if they take out that 35, potential short setup right here, not later, but right when they take that out and then see how far they can run it. I would still look to buy against the 27, 28s, 20s, down to the probably down to the 12s. But I would shift my bias below the 20s to range bound at that point. As you said, volume H on the side there, that comes out there back in this lower range again. So that's gold traded from the long side of the market to get started. Let's see what happens. But watch for that potential short retracement trade. That would be more of a technical correction. That's what that would be. And then finally, oil backing off a little bit. So we had a little pop to the upside to the 66.40s. Now we're right back down, heading back to value again. So oil going back and forth. And they were up here probing pretty well. Now they're heading back down towards the tractor at 63.50. Let's see where they're going to go. But I would start that for the short side. They already taken out these key support areas, so I would look for shorts against the 64.95 and the 65.30s for rotations back down. and let's see how far it can take it. Still looking to buy against the 64.30. Well, that we just came out 64 then, so 64 would be the last one to potentially consider buying opportunity. But I'm thinking they're going to be heading down to the 63.50s right now, so not going to be super aggressive on this on that last buying opportunity, but it could hold. And if it holds, we can certainly trade back up again. So, uh, so you see that ledge right there. They have two support areas, right? Two days that support held. So 64 is a pretty good support area. So that would be the last one I would look into buy against. But this is the third time they come back down there, so chances are we may take that out. So starting off is with the bias to the downside, looking to sell strength, 64.90s and the 65.30s for rotations back down. If they back up about 65.30, we are back on the long side on gold. We're going to trade that on the long side at that point. All right, so that's oil and gold. Back to the ES. And we don't have anything coming out at 8:30, so the next piece of news is happening at 10. And then we'll see how this, if this overnight is going to be able to hold on to the gains, or if you're going to get reversed. So we leave it there. Good trading, guys. And I'll see you back at 11:30 for the next update. And let's see how this goes. All right, guys, later.